Welcome to the weekly swing low. It's April 5th, 2025, and we have one of the biggest opportunities we've had in at least the last 5 years. This is a COVID level sell off, which means we're going to have a gigantic bounce at some point. We are going to have the bottom, and we'll be talking about it here on this channel. So, this is probably one of the most important videos you're going to watch. Please like this video, help increase its visibility, share it. This is going to be super important. We can't predict when the bottom will come, but I guarantee you, we will be able to see it in real time and we'll be able to get in. Not at the very low, that's impossible to do, but we'll be able to get in once we have that confirmed follow through. So let's go through our tickers. It was a bloodbath out there, but we'll talk about some actionable levels to look at. And I'll start by saying that if you are still in the market, that's okay. Now is not the time to panic. That said, if you've been following this channel, hopefully you don't have a ton of capital in the market because you know we were in weekly cycle decline. That's the whole point, to kind of mitigate risk. And so let's start with just like the near term price action. So if we just look at the Friday like these are your Friday hourly candles on SPY. And so we talked about the gaps, right? Like this is one gap, this is the other big gap. These are hourly candles. And so you can see we just kept making lower lows on the hourly candles on Friday. And in fact, for the last candle of the day, we closed as a bearish outside candle. So you can see this is the last candle, right? Candle before that, we made a higher high, and then we closed as a slight lower low. Not a great sign for Monday, but it gives you a very actionable level. The high for that candle was $513.92 on SPY. So $513.92. So if price can break above that level on Monday, right? Like imagine an hourly candle that does something like this. That means this is a swing low. That's your signal. That's the way a bottom would start. I think it's too early for a bottom. Again, I'm not predicting when the bottom is going to be, but we'll talk about that. What we might expect based on the daily candles, based on the weekly candles, based on where we are in cycles, etc. But that's the way the bottom is going to start. You're going to have a swing low at a lower time frame. And that's what, so right now, again, that level is breaking above 513.92. You got to get above that first. Of course, you're going to have a swing low on the 15-minute chart before and even on the 5-minute. But like, I think the hourly is probably the most actionable place to look at here. And so, I'll tell you what that level is on each chart that we look at. So we'll start with that. So we're starting with SPY there. But looking at the daily chart, we are on day 16 of the daily cycle. So as a reminder, we had this low here. That was back on March 13th, which was our daily cycle low on day 41. So we had a 41-day cycle. So it rallied for 25 days and then declined for, what is that, like 16 days. And then we had this rally here. Well, we first had this consolidation, and we talked about that. Then we had this gap up, this rally. And then we had this flush lower, swept these lows. And then it looked like, oh, this is actually going to be potentially this. It's going to be a double bottom of this. And then, of course, again, as we talked about, we had our Liberation Day, the reciprocal tariffs announced on this day on Wednesday, and then we have our big gap down. And so we talked about what you would need to have an hourly swing low, but that 513 number obviously would just be inside the range of this big candle. And so what we really need is a close above the high of this candle to have a daily swing low. So that would be 525.87. And so the way to think about this is these numbers are going to keep moving, right? Like if we make lower lows next week, then the level that we need to clear to have a daily swing low will become lower because it'll be based on the low from that candle or the high from that candle that's marking the low. We'll talk about it in real time. That's one thing I will commit to. Once it's pretty clear that we've spotted the bottom, I'll definitely post on X, and then I'll make sure to make a video here so we can talk about the details. This is a huge opportunity, not one to be missed. You should be getting excited about trying to catch a piece of the bottom as opposed to being despondent about the crash, right? That's the way to think about it. So again, right now that level is 525.87 for a daily swing low on SPY. And so that is SPY for the daily. So day 16, that would be a really, really short daily cycle if somehow this was the low. That's not impossible by any means. Especially because this decline was so crazy dramatic, Maybe that's all price needs. I doubt it though, right? And so you could see a world where we still have a few more weeks of decline, really, right? Because all of next week gets us to day 21, and then yeah, you could see. So all that to say, kind of early for a daily cycle low, but let's watch for that daily swing low because it could come at any point. On the weekly, here's the other bad news. Last week was week 11. Again, that's very early for a weekly cycle low. We've had short weekly cycles, like the one here that was from the middle of April 2024 to August. That was only a 16-week cycle with a little 3-week decline. Maybe we get something like that again, but it's only week 11, which again means we probably have a few more weeks of downside. Maybe the weekly cycle low coincides with the next Fed meeting. That timing would kind of make sense, right? I'm thinking we're going to have that in the next something like 4 weeks. And so, the other important levels to point out here, we've broken below this weekly cycle low. We've been talking about this, right? How, we had since the bear market low of 2022, we had this weekly cycle of 22 weeks, this one of 32, this one of 24, this short one of 16, and we just had this one of 23, just the one that bottomed in January. Now we've closed decisively below that low, so we've broken this pivot, and we've now closed below this low of the 16-week cycle, the weekly cycle that went before the last one, right? And so that was a low at 505 at what is that? Excuse me, 505.48. So that's important, right? We're here sitting below 505.48, not by much, but that's a level to keep in mind. And I would think at this point, the next level we want to be watching is the other previous weekly cycle low. So that's this level here. And you can kind of see that it kind of makes sense almost, right? Like this move here is being unwound, right? So this whole rally has been retraced. We've given up this whole rally because we're now back here. And now it's a question of, are we going to give up this whole rally? Like, are we going to give up this piece too? At this point, that seems likely that we get at least there. So again, so what is that level? That's 487.65. That's not much further from here. I mean, percentage wise, that's just another 4% down. I mean, we're dropping 4% in a single day. So that's one bad session and we can get down there very easily. Now, of course, the next big pivot after that, like big one would be this one. I mean, you had this little area where price kind of consolidated a little bit, but that's the number I'm looking at. And there's an equivalent level on all the other charts as well that we'll talk about. We'll also, like, looking at how the monthly is shaping up, again, just a reminder, we talked about how at some point, this rally off the bear market low in 2022 was going to stall, and this is it, right? It didn't have to be a massive decline like this. We talked about how it could be a sideways consolidation. It turns out we're getting the massive decline. The good news is at some point we're going to get the massive reversal. On the monthly chart, that would be we need to get above 567. So that's why you have to pace yourself, right? Take it one swing low at a time, one time frame at a time. So we've got to get that hourly swing low first, then the daily, then the weekly, then finally we'll get the monthly. And just for that matter, the weekly swing low actually is the same level as the monthly. That makes sense because the month just started. So it's 567 as well. Like that's what we need to close back above for a weekly swing low. So those are the SPY numbers. Let's go through the Qs. We'll talk about basically the same equivalent levels for the Qs, and we'll look through all the tickers. I want to give you guys these actionable levels so you're not panicking. And that's the most important thing. Don't panic. Price action will reveal what we need to see. So for the Qs, also made a bearish outside candle for the hourly chart. That's how we kind of closed. So a close above, if we can get above 431.34, that gives us a swing low on the hourly chart, and it's a good first step. And I'll even, let's just, just for the sake of it, on the 15-minute chart, if we can get above 430.48, that gives us a little swing, like to kind of get things started, right? Like that's your first sign. Like you need to get that before you can get the hourly swing low. So that's the Qs. And for the Qs, the daily swing low would happen above 440.37. The monthly swing low happens above 479. We have a long way to go. The other thing I want to call out, we'll go back to SPY as well, is if you think about the yearly chart, that gives you your next like real level. So QQQ is on pace, and so is SPY. They're both on looking at the same pattern. They're on pace to make a bearish outside yearly candle. So that would mean going below the low of last year. And so that actually is the weekly cycle low from last year that we talked about. That was the low of the year, which kind of makes sense, right? So for the Qs, that would be 392.42. Let's go back to SPY really quickly. And for SPY, that would be 459. Is that the same level as this one? No, that's actually even deeper. Yeah, so it's actually closer to like here. So so the 487 level is actually that would be breaking below this weekly cycle low. But if we were to make a new like a low below last year's low, so that would be on SPY, that would be 459.14. So that's your ultra bearish case, which is to say if I were to see price break below that, that is definitely the kind of level that could set a bottom where you could see a fierce rally, right? Like if we clear out last year's lows, that means anyone that made money last year that's still long, now they're underwater, right? Like it's now price is now below where they bought it, right? Because it's below the low from all of last year. So that's a big number to look for. So that's 459 on SPY. And we said that number on QQQ is much closer to hitting 392.42 on the Qs. So that becomes your kind of like ultra bearish kind of target. For the Dow, let's just talk about what that number is. Your ultra bearish target for the Dow would be 363.75. More likely for the Dow, though, we get down to this cluster here that's my base case. So like around here, so call it 373, like in the 370, mid 370s. And for the Dow, we actually didn't make a bearish outside candle. Oh, no, actually, this is the 15-minute chart. Let's go up to the hourly. So, yep, same pattern, bearish outside candle. So, getting above 389 on the hourly chart would give you a hourly swing low and good first sign for the Dow if we're going to get a little reversal. What about IWM? So for IWM, we did not close as a bearish outside candle. That's interesting. We didn't make a lower low. It's not a great start. So for the Dow, a move below 180.87, bad news. A move above 182.65, that makes this whole thing, this cluster, a potential swing low for a little move up, even if it is a little temporary relief rally. Okay, so that is IWM. And then let's look at SMH. So SMH is, and this it's all the same count on the weekly. So for SMH, important thing to point out, this thing actually topped out. So let's zoom out. Let's look at the monthly chart. So for SMH, this thing actually topped out back in July, right? If you were paying attention, we made a high in July, and since we broke below 227, all the price action has been a swing low, so below this line. And so we're just accelerating, like this consolidation is now breaking to the downside, right? And you're like uber bearish scenario, if you look at the weekly, we've already broken below this cluster of lows, would be something like here, right? Now you can see this is an area where price had some trouble getting above, consolidated here. So call it 160, right? Not terribly far from down here. But let's talk about that actionable near-term level. So the hourly didn't quite make a bearish outside candle, but almost. Breaking above 184.88 would be your signal. That would leave behind an hourly swing low and kind of start at least a potential relief rally. But again, given where we are in the daily cycle, given where we are in the weekly cycle, I doubt that we get a bottom before the next few weeks, right? Probably the bottom probably coincides with the Fed meeting is my guess at this point, just given the timing. That's SMH. Let's look at Dixie. So Dixie is on week 27, right? We had this big down week the first week of March, and then essentially 3 weeks of consolidation followed by this big down week. But then we have a big retrace. And so this looks like it wants to break below this low here, like basically the 100 level, right? So Dixie is essentially crashing along with equities, except notice that Friday put in a green day, except it's just an inside day right now. So gives us very clear levels to watch, right? So price needs to get out of this range. So the range is a high of 103.38 and a low of 101.27. And we're obviously much closer to the higher end of the range. So a break above 103.38 would leave behind a swing low on the daily, which is what you generally see is the Dixie rallies when equities are dropping. So this is definitely rare where they're both crashing together. And we're on week 27, right? And so definitely in the timing band for a weekly cycle low. A break above 104.39 would create a weekly swing low. So that would be something that looks like this, right? And reminder, the ticker to play the Dixie is UUP. Very cheap options in terms of implied volatility. So that's Dixie. And the 10-year, which has been moving along with the Dixie, is on week 28. Very similar pattern. Like, doesn't this look super similar? A big red week and then several weeks of consolidation and now another flush. But again, it's week 28. That said, this thing tends to have really long weekly cycles. The last 2 weekly cycles were exactly 38 weeks. And so you could see a world where this is just a little bit of a pause, maybe a little price discovery inside this range here before another flush, because the 10-year seems to be crashing lower, going lower, which is what the administration wants, right? The administration wants the 10-year lower. And so you can almost argue this is kind of part of the playbook. The stock market is just collateral damage in a way. So we're going to be watching this very closely. A break above 4.26 gives you a weekly swing low, but more actionably on the daily, look at this nice little lower wick. A break above 4.04, right? So something like this next week would mark a daily swing low and a potentially the start of that weekly rally as well. So you want to watch that level very closely and highly correlated with mortgage rates starting to drop as this thing drops. So that's the 10-year. What about oil? Oil is crashing. We've talked about this for many weeks now, these updates, that we were basically just inside this gigantic range and we drew this line and look at where we closed. We finally closed appreciably below that range. That's not a great sign. You might imagine a little consolidation, a little price discovery, but I would expect lower lows. And, this is, almost certainly going to follow the same trajectory as the stock market. So I expect as the stock market continues its weekly downtrend, this will continue as well, especially after this more decisive close below the lows. The next real level to look at this little low here. So that's 61.76. So call it just below $62 a barrel. That's US oil WTI. What about TLT? So let's start with the weekly chart. That's the most important here. So it's week 11. Remember, this was your high for a few weeks. It was week 7. Looked pretty ominous in real time. Was this your weekly cycle top? Then we had some consolidation, week 8, week 9, week 10, and then boom, week 11. Trying to break above this high here, right? And so if you look at the daily, the thing is that this thing is tough to hold on to. Look at the candle on Friday, right? Look at these last 3 candles. We're making higher highs, but we're closing red. So it's kind of hard to hold on to. This is one of those things where if you're going to trade something like this, you have to know its character. You have to understand how it trades, because this is kind of hard. Again, it's hard to hang on to. It is going higher, but it's closing red. But very clearly, looks like we're in, we're still in the advancing phase of the weekly cycle, week 11 at this point. And so you want to watch, the level I would be watching for is a break below 91.84. So in that area, as long as we can stay above that, no reason this uptrend can't continue. And TBT is just doing the opposite here, kind of breaking down on the weekly. So if you wanted to see for a reversal on TBT, that would be a move above 34.10 on the weekly. That would give you a weekly swing. So that's TBT. So now we're going to move into crypto, and then we're going to do precious metals, and then we'll close out. Again, patience is the name of the game here. Watch those levels. Watch that price action. For crypto, oof, this is just ugly stuff. My goodness. Look at what it's doing here. Just kind of nothing, just like churning. So this most recent price action, I would say the thing to be most aware of is this big upper wick. So that's a high at 88,530 and a low at 82,283. So just everything inside that range is just kind of noise, right? And that's basically the same as all this stuff, right? And so at this point, nothing really to do here, right? Like this is just consolidation on the weekly chart. Oof, right? Like we're holding this swing low here so far, right? Like as long, again, if price can break back above, so if you can see this little candle here marks the low. The high of this candle is 85,318. That could be an actionable level, a break back above that level. And as long as we can stay above that, this thing could rally. The problem is this thing is probably going to follow the stock market. So no need to be a hero and try to get in front of anything here. I would just be patient. Let this stuff come to you. For ETH, very kind of similar situation here, but looking weaker, similar pattern, but like a weaker version, if you will. Big upper wick on the weekly. And so for next week, best case scenario is we stay inside this weekly range. So that's a high of 1956 and a low of 1750. I doubt it's going to be able to do that with markets crashing. And if we just look at the big picture chart on something like ETH, we're already below last year's low. That's just important to know, right? Like when price does something like that, that's just an important thing to know. The low that low is 2100. So price really has to break back above that to prove itself. And that would look super bullish. That would leave behind a lower wick here. Imagine we're talking about this months from now. That will be your goal signal. That will be your, oh, okay, right? Like these people were washed away. This wick is representing a ton of people that are mad that they sold. Wait for that. There's no need to panic in here. Let this thing come to you. Bitcoin has done a similar thing. Actually, no, that's not true at all. Wow, that's important to know. Bitcoin is actually nowhere near the low of last year. Wow, the low of last year is 38,500. Now, I mean, stranger things have happened, right? Like that would be a 50% decline. That's certainly not uncalled for, but that really highlights the strength of Bitcoin versus ETH here. Wow. Let's go with the precious metals, and then we'll close out. So for gold, it's been holding up, but remember when you start to have margin calls, it's hard to hold on. I think maybe that's part of what's happening with silver. Silver got it was a bloodbath for silver. But let's talk about gold first. So in terms of the daily cycle, we are on day 20. Friday was day 25, and by closing below the low of Thursday, so that's 3,054. That gives us a daily swing low. So it actually is really simple from here, right? Gold has to break back above 3,054. And if it can do that, it's no longer below a daily swing high and it can resume the daily uptrend. But I think it's more likely that this could represent a daily cycle high. The catch is gold is really catching a bid. So we could see a world where this actually ends up just being a relatively shallow decline, similar to this little decline. They're just kind of getting bought up. But that's your level, 3,054 on the daily. More importantly, this was just week 12, and a close next week below 3,015 would make this week a swing high. Now, keep in mind, this week closed, right, as a swing high as well, right? Like, notice this closed below the low of this candle, which was the high at the time. And so at this point, this was a swing high, right? We recovered from that. Now, with the whole stock market pulling back, maybe we can't quite recover from this the same way. But that's your level. That's your actionable level. In terms of like the big picture, we are marching towards our 8-year cycle high, right? What month is it? let's go to the monthly chart here. Excuse me. Just as a reminder, it is month 31. And as a reminder, the shortest weekly cycle decline on record is 34 months. So we're at month 31. So we're certainly not early by any means, but we could still get several more months of rally. You could see a world where we get to a round number of like 3,500, right? But you know, we're getting longer in the tooth, and we'll definitely be talking about that on this channel as well. There's going to be a point where this uptrend is over, just like the stock market's long-term uptrend is over. That doesn't mean, I'm not saying we're going into a multi-year bear market, but at some point we're going to get a multi-month decline for gold, and it's going to be your 8-year cycle high. For silver, this thing got taken out to the woodshed, down 7% in one day after this bloodbath. And so silver has made a pretty decisive swing high. That swing high happened back on March 28th. So that was on day 20. So it topped out way before gold did. And I think GDX did a very similar thing. And so right now, your actionable level on silver to have a daily swing low, you got to close above 32. And if we zoom in, kind of similar to what we did for the S&P 500, more near term, you really just need a move back above this cluster of lows here. So above 2981, right? Like imagine a candle that does something like this, right? That leaves this cluster where really this becomes a swing low, but this cluster of lows here. So that's your first level that you need to get any kind of upside action. But again, stock market pulling back, getting taken out to the woodshed like this, not surprising that you see that you see silver getting cut down as well. And the weekly, I mean, this has all the makings of a weekly cycle high here on week 12. I mean, just look at this visually, what just happened. We basically took out the price action of the whole weekly cycle right here, right? Where does this low? Wow. Like we didn't quite give back the whole rally yet, but I mean, you would expect maybe we get a little bit more consolidation, but you expect that this doesn't end until we get something like that, and then probably, you know, a little bit lower than that. So call it, you know, a move below 2878 in the cards here. I mean, man, what a candle. That is a dramatic candle, just erasing this entire rally. And what about GDX? So similar thing, not quite as dramatic. I mean, look at this GDX chart, right? Like this candle to be as dramatic as silver would have to be like this. I mean, could you imagine that? I mean, that just looks comical. But I mean, this is pretty bad too. But so to be clear, this thing forms a weekly swing high below 44.19. That's a decisive close below that. So you really need to get back above there to see have any kind of excitement. And on the daily, the swing high is active below 45.44. That happened on March 28th right here. You would need for GDX, really, let's zoom in here on this hourly. You would need a close above this cluster. I mean, really just this cluster here. So 42.32 to kind of get things started. The ancillary stuff like palladium, all doing similar things, crashing. I mean, palladium looks like it's about to lose this long-term shelf of support around 80.90. I mean, look out below if it does that. And for platinum, very similar thing. You got this shelf around, call it the 900 area. And that a break below that could take us into the 800s very easily. Look at this monthly chart on this thing. I mean, this is just nasty stuff. So that's platinum. And then finally, we'll close out with natural gas. So natural gas, we talked about last week, had a nice little hammer candle. And then we came in this week, made a higher high. I was like, oh, okay, maybe we get a little bit of follow through, but of course got dragged down with the market. And we are now on pace for a compound bearish outside candle. As a reminder, that's when price is not able to complete an outside candle. And so the outside candle gets completed the following period. So in this case, we made a higher high and then we went red, but we didn't make a lower low. We didn't get below 372. And so we'll probably close the deal next week. And so the way to think about it is these two candles become a combination bearish outside candle of this candle. I mean, technically it needs to be of these two candles, and it didn't make a higher high of this, but that's just a technicality. Very important concept to understand because it happens all the time on all time frames. So that's your natural gas update. And in terms of, yeah, so that would make this high here potentially your weekly cycle high. And that's a close, that's a weekly swing high below $4.01. So you can see that visually right there. That can't, like this price action, like just adhering to the levels very clearly, removing the emotion or mitigating it at least, so important, especially in this environment where markets are crashing. I hope you found this helpful. Again, please like this, please share. This is a massive opportunity, and I'm hoping that people can take advantage. We can do this kind of in real time. This does not come around that often. Just be clear-headed. Don't get emotional. Remember, position sizing is a superpower, and price action will be your guide. Thanks for watching.